The truth of term insurance, the wisest decision for the family's safety. At around 12 o'clock at night, a family was standing in a hospital corridor. The doctor was inside, the children were silent, and the wife had only a small bag in her hand. Until a few hours ago, everything was normal at home. The EMI was running, there were school fees for the children, there were medicines for the parents, and the budget for the next month was already tight. But an accident changed everything. The question now was not whether the main earner of the house would return or not. The question was how the house would run without him. The real story of term insurance starts right from here. Because in the biggest uncertainty of life, not just emotional support, financial support is also needed. The fear is that, if the income stops tomorrow, how many months will the family be able to last? The curiosity is how a small yearly premium can become a protection of lakhs and crores. Term insurance is not an investment scheme. This is a pure protection form of life insurance, which gives the sum assured to the nominee upon the death of the insured person during the policy period. If the policyholder survives until the policy term, a maturity amount is not received in a standard term plan. This is the very reason why its premium remains lower than many other life insurance products. A lot of people step back upon hearing just this. They feel, if the money is not received back, then what is the benefit? But this very thinking stops one from understanding the purpose of insurance. The work of insurance is not to grow money but to transfer risk. Just as a helmet does not stop an accident but can reduce the impact of an injury, in the same way a term plan reduces financial injury. If the house depends on your income, then term insurance is not a luxury. It is the backup of that promise which you fulfill by earning daily for the family. The biggest strength of a term plan is high cover in a low premium. A healthy person at a young age can get a big life cover at a comparatively affordable cost. That is why taking it early is considered a smart decision. With increasing age, health risk increases and the premium can usually increase too. But just buying early is not enough. Taking the right cover is necessary. A lot of people become happy hearing 50 lakh rupees or 1 crore rupees, but they do not do the calculation. The cover amount should be decided seeing your annual income, existing loans, future goals, children's education, spouse's needs and inflation. If you have a home loan over you, then the amount of that loan should be considered separately in the term cover. Otherwise, the family might have to struggle to save the house. Car loan, personal loan, or business liability should also be included in the cover calculation. After death, debt does not remain emotional, it becomes a legal and financial pressure. The payout of term insurance is not just for your family to run expenses, it is for saving financial dignity. Dignity means that in helplessness one does not have to sell the house, land, or jewelry. A good term plan can protect children's education. If the father or mother is no more, then the child's studies should not stop due to a lack of money. This gives time to the spouse. The pressure of suddenly searching for a job, managing a business, or taking family decisions can reduce. This can keep the parents' medicines and care continuing too. In India, many young earners are a silent financial pillar for their parents. Term insurance is not just for married people. If the financial dependency of your parents, siblings, or any family member is on you, then this can be relevant for you. For self-employed people, term insurance is even more important. Because they do not always have a stable employer benefits, PF cushion, or group cover. Salaried employees should also not depend only on company group insurance. As soon as a job changes, group cover can change or can end. A personal term plan stays with you, not with the company. This very independence gives a very big safety in financial planning. Now, the biggest mistake while buying a term plan is filling the proposal form in a hurry. The foundation of an insurance claim is made from that very form. Health history, smoking, alcohol, previous illness, surgery, family medical history, and existing policies should be disclosed in an honest way. If you use tobacco and try to take a non-smoker premium, then this can become a problem for the family in a future claim. Honesty is the cheapest protection in term insurance. By speaking a lie, the premium can become a little lower, but a heavy risk can come upon the family at the time of a claim. There is important protection regarding life insurance policies in Section 45 of the Insurance Act. Generally, after a policy completes 3 years, the insurer cannot easily question it, but situations like fraud are different. This does not mean that giving wrong information is safe. The right thing is that the policy should be transparent from the beginning, so that the nominee does not have to do an unnecessary fight later. One should not be afraid of a medical test. Many people think that if a medical test happens, the policy will become expensive, but the test helps in correct underwriting. If there is a health issue, the premium can be a little higher. But a correct disclosure is better, compared to a claim dispute happening due to a hidden issue. While buying term insurance, the policy term should also be chosen thoughtfully. The cover should be up to that age, until which the family depends on your active income. If you are planning to work until 60, and the loan and children's education will be completed by then an unnecessarily very long term is not always necessary. But a very short term can be dangerous too. If the cover ends at 45 and responsibility remains, then a protection gap will be made. Understand the premium payment option too. There are options like regular pay, limited pay, and single pay. Every option puts a different effect on cash flow and total cost. In regular pay, you keep giving premium until the policy term. In limited pay, the premium can be higher for a few years, but the payment is completed early. In a return of premium term plan, the paid premium can be received back at maturity, but the premium is usually higher. It is necessary to compare the protection cost before buying it. A pure term plan often gives the cleanest and most affordable protection. If investment is kept separate and insurance separate, then clarity remains more. Riders can be available too. Add-ons like accidental death benefit, critical illness, waiver of premium or disability rider can be useful in some situations. But do not add a rider seeing just the name. Understand its benefit, exclusion, waiting period, claim condition, and extra premium carefully. A critical illness rider is not a replacement for health insurance. Term insurance protects the family from death risk, health insurance from medical bills. The role of both is different. On not having a term plan, the family faces an income shock after death, and on not having health insurance, savings can break in illness. Nominee detail is very important. The nominee's name, relation, age, and contact should be correct. Update the nominee after marriage, childbirth, or family change. If the nominee is a minor, then the details of an appointee can be necessary. Otherwise, the legal process can be complicated in claim settlement. If married persons wish, they can understand the option of taking a policy under the Married Women's Property Act. From this, the benefit can be ring-fenced for the protection purpose of the spouse and children. Every family case is different, therefore it is better to take a decision after understanding from a legal or financial advisor. Understanding its impact is more necessary than putting a tick in the insurance form. The family should know the claim process too. Basic things like the policy document, policy number, insurer contact, nominee ID, bank details, and death certificate should remain accessible. A simple insurance folder should be in the house. The physical copy, e-policy, nominee details, and premium receipt should be properly stored. Today, the importance of e-insurance and digital policy records is increasing. 𝐼RDAI is also working on digital initiatives to improve policyholder service, transparency, and claim experience. Initiatives like Bima ASBA have been brought to increase transparency in premium collection so that before the proposal is accepted, money is not debited unnecessarily. Documents like the customer information sheet have become important for explaining benefits, exclusions, terms, and the claim process to the policyholder in simple language. The free look period is a safety window for the policyholder too. After receiving the policy document, if the terms are not liked, an option of cancellation can be found according to the rule. Therefore, do not keep the policy in a drawer after buying. Read the document in the first 30 days, check the sum assured, understand the exclusions, and get mistakes corrected immediately. The claim settlement ratio can help in looking, but do not take a decision based only on that. The claim amount ratio, solvency, customer service, and complaint experience matter too. The premium being the lowest is not always the best. If the company service is weak, claim support is unclear, or terms are confusing, then a cheap plan can turn out expensive. Saving oneself from mis-selling is necessary too. If any agent is selling term insurance like an investment, bonus, or guaranteed return plan, then become careful. In recent reports, there has been discussion of reforms on insurance distribution and commission structure, because aggressive selling and wrong product pushing can cause loss to policyholders. Your job is to ask questions. When will the death benefit be received? When will it not be received? What is the suicide clause? What will happen if the premium lapses? How will revival happen? Clear all this. A suicide clause is also there in the policy. Usually, special conditions can apply in the initial period. Therefore, reading the document is necessary. Premium lapse is the biggest silent danger of a term plan. One premium was missed, the grace period passed, and the cover can stop. Keep an auto debit, calendar reminder, and emergency premium buffer. Term insurance has value only when the policy remains active. Tax benefits can be received, but do not make tax saving the main reason. The main reason for term insurance is family protection. Deduction is only a secondary benefit. Tax planning can change according to the new tax regime or old tax regime. Therefore, see current tax rules and personal situation before filling the premium. After taking term insurance, review it every 3 to 5 years. If income increased, loan increased, a child was born, or a new responsibility arrived, then the cover can become inadequate. Planning does not end by taking one policy. Life changes, therefore protection should be updated too. Now think, if the family standing in that hospital corridor had proper term insurance, the pain would not reduce, but the financial fear could certainly have reduced. Because no money can fulfill the absence of someone close, but a lack of money can make that grief even more ruthless. Term insurance is not a certificate of love. It is a quiet decision of responsibility which handles the family on that day when you will not be able to handle it yourself. If you are an earning member and someone depends on your income, then calculate your cover gap today itself. Compare before taking a policy, tell the truth, read the document, update the nominee and keep the premium regular. Life is uncertain, but planning is in your hands. Term insurance is not a matter of death, it is a matter of keeping the family's life saved. And this is the very reason why taking term insurance with the right age, right cover and right disclosure can truly become a wise decision.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible. But in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.